Tesla has just dropped their earnings. It has come out relatively in line, or at least that's how we're reacting from the stock perspective. So let's quickly run through the earnings. So their Q2 2023 earnings, revenues came in at 24.9 billion compared to the estimates of 24.5 billion. And then adjusted EPS came in at 91 cents compared to the 81-cent estimate. So again, beating estimates in those two. The key thing, or the key miss, was on the free cash flow front. So they were estimated $2.18 billion in free cash flow, but they only have 1.01 billion. So that's going to be the big miss. And one other thing before we run through the technicals is I did want to focus on how their revenue has been growing. Again, you look at even 2022, 2.3 billion from net income, and now at 2.7 billion. And then you can also look, and this is a bigger one, is that the revenue difference at 16.9 billion last year, and then this year coming in at 24.9 billion. So big improvement. As of now, still a big growth stock. I think the big time you're going to see this stock crush is that one time we get that quarter that comes out and you finally get one that's lower, or a relatively big miss. In this case, we did have a lower result, but wasn't a massive one. But if we see like a $16 billion release now, that's where you're going to see this stock probably start to crumble. But anyway, what are the key things to be paying attention to? So again, this is how we're reacting after the numbers. The main thing we're going to be watching for now is going to be the conference call, which should be out in a few minutes or within the next hour or so. And again, this will kind of pick the overall direction of where it goes. As of right now, the key level I'm paying attention to is this 289.6. Now, this is our second deviation on the 1 year. This is a strong level, but considering we're going to keep hitting this on the release, again, we're going to be looking a bit further out. But this was nice to know, because again, if you were in the Discord, you would have saw what we tried to catch, and that was on the initial move. You see this quite often on a lot of stocks, but especially one like Tesla. The first move is normally a fake out, so it will move in one direction. You can normally look to buy into that if it's goes to the downside, and then you can look to trade it back to that value. Again, we see this time and time again, so it's one thing I definitely pay attention to. You tend to get these fades. Now, what are the key levels, though, apart from that we're paying attention to on Tesla? So when I'm looking at Tesla, the main levels I'm paying attention to from the support side is 289, so basically where we are now, and 270 as that lower support. From the resistance standpoint, we're paying attention to $311.77, and then at the high end, $342.50. Now, this is much rather the direction I would rather see us move, and the reason I say that is if we can start pushing to this move, this is going to be quite an easy short bias play. So like right now, I'm not too directional on this stock, but I think as soon as we come into this area, or if we can come to this area, we're going to be extremely overbought on the stock, and taking the short bias play on it should be low risk, high reward. And again, we can play them defined risks, so that can be defined risk spreads, so vertical spreads, or shorting the shares. Buying calls going to be expensive on a stock like Tesla though, or just buying some outright puts. So a lot of ways to play it. That's going to be my main focus. Again, I don't think the conference call will take us all that distance, but it may be able to take us to that 311. So if we can, that's going to be a potential play, just not as big size on this level compared to the 342. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.